Well, CEAT, that's the next management on the show. The stock is up close to 20% in 2024, but the rising domestic rubber prices, well, they've been a bit of a headwind. In fact, we have rubber prices that are up 50% in 2024, though there were signs that it's cooling off a little bit from the top. To help us out with how are the demand trends, what's the volume guidance, and what does it mean in terms of profitability, we're joined by Mr. Arnab Banerjee, the MD and CEO of CEAT. Hi, Mr. Banerjee. Good morning, and always good to speak to you. Thanks a lot for joining in. Well, let's focus on the pricing side. You had hinted that price hikes are likely to be taken up. So could you tell us in Q2 so far, what are the price increases that have been taken? Are you intending on increasing prices yet again? If yes, by how much? So you're on mute. We'd like to listen to you. So, if you could unmute yourself.
Sorry, the price increase actually took off by the end of Q4. So if you track from April till July, August, we have taken up about 3 to 4% price hike already in truck bus radial, about 3% in passenger, and somewhat less, about 1.5% in the two-wheeler category. But it's inadequate to cover the raw material price hike. Natural rubber has been trending at 30 to 40% higher than what it was in Q4 base. And synthetic rubber and imported natural rubber, everything has moved up. So the entire basket has moved up. I think we should be taking another 1 to 2% price hike. It's required. And we plan to take some of that in the month of September itself.
Year to date, in this fiscal so far, it's around 3 to 4%, and you're looking to take another 1 to 2%, right?
Absolutely, that's replacement market. OEM price hikes come with indexation lag of 1 quarter, which is coming.
Got it. All right. I want to ask you about natural rubber prices. As you said that on a per kg basis as well, I was looking at the trend. I think it went from around 180 also to more than 200 on a per kg basis. You can correct me on that number. I think it peaked out at around 210 rupees per kg. So as of now, what is it? And what is the trend going ahead from here on?
See, it went up to 240, even 250, 260 levels also for a short period of time. It's around 220. As we move from Q2 to Q3, we will enter the tapping season. Right now, also, it's a low demand quarter, usually monsoons. So we expect this rate to stabilize at around maybe 200. It's anybody's guess. The problem is that we are a rubber deficit country, and there are not enough stock available in the market, which is what is also fueling the price. So we had to resort to imports, which is covering the production requirement a little bit. But overall, I think taken together, we would expect it to stabilize by Q3, and then maybe, hopefully, in Q4, Q1, it should come down.
Sir, just want to get your sense on overall demand, because when we look at the aggregate numbers, we just got FADA numbers, retail level numbers just now, half an hour back. And the picture seems to be showing sluggishness. I'll just read out the numbers. Passenger vehicle sales, they're down 4.5% year on year. This is everybody aggregate put together. These are FADA numbers. They're down sequentially. Total retail sales are up only 2.8% year on year, down 7% month on month. And CV, of course, let's not even start. The CV cycle has been unimpressive for many months in a row. It's only the two-wheeler space that seems to be bucking the trend. Isn't there a demand concern that's building up? And are you confident of delivering this double-digit growth that you guided for earlier?
Yeah, so let me throw some light on the numbers that you just spoke about. Those were OEM sales number, right? So OEM business is about 25 to 27% of our portfolio. That is impacted by the numbers which you just shared, and they're correct. The replacement growth is somewhat better, right? And the rural growth, as I mentioned in the last conversation, it's coming back. If we look at our farm or two-wheeler sales, then the rural growth is actually higher than urban growth in replacement. This is happening after a long time. And we expect this trend to continue after the monsoons. About 55% of our sales is actually replacement sales. So that is where we expect a high single-digit growth in 2-3 wheelers, a mid-single-digit growth kind of thing in passenger. And we expect the commercial vehicle space also to have good single-digit growth in replacement. As far as OEMs are concerned, we understand that the second half for commercial vehicles will be better. It's true that it's stagnated because of elections, and quarter 2 also is kind of flat. Two-wheelers are doing well, but two-wheelers are catching up on the pre-COVID levels now. And finally in this year, they will catch up with the pre-COVID levels of volume. And passenger is down on a very high base of last year. That's the OEM. We also have a 20% international business. So there the order books are looking good, very robust. We are growing in very, very high double digits in international. And we have a very strong outlook in second half. So overall, we maintain the outlook of double-digit growth in this entire financial year.
Mr. Banerjee, hi, good morning. On margins, sir, did you put out a number for 25? Would there be like 100-150 basis point compression over 24?
So first quarter numbers, it's impacted. The raw material price hike and the mismatch between the finished good price hike will continue in quarter 2. So margins will be under pressure in quarter 2 as well. Then we will see if the prices moderate. Usually the margins come back in the second. It might come back a little bit up in the second half. Overall, I think it will be lower than last year.
Okay. Is there a sensitivity that we can work with? I mean, obviously, in terms of rubber prices and margins, how does it move? I mean, the relationship now, and has it become a bit more flexible as compared to the previous years? I mean, so it's not entirely dependent on how rubber prices move, or is it still as dependent?
No, rubber prices is about 30 to 40% of the portfolio of our RM basket. And if you look at the passenger segment, which is the two-wheelers and the four-wheelers, which is what is selling well in replacement and the international market. And for us in OEM also, we are looking forward to good growth in two-wheeler and four-wheeler in the second half because of the visibility of models and the brand fitment. So that is more dependent on synthetic rubber and less on natural rubber. Natural rubber is a bigger constituent of the truck bus radial segment, where we are a smaller player, relatively speaking. We have a single-digit market share. So to answer you directly, I think the degree of freedom for our portfolio vis-a-vis natural rubber is a little bit higher, but still it is significantly dependent. And we have to calibrate our price hike based on natural rubber price.
All right, Mr. Banerjee, so just to sum things up, in the first half of the year, things will be under pressure. Quarter 1 had some marketing cost, raw material costs were higher as well. So first half of the year, margins will be subdued with the recovery in the second half of the year. And put it for the year together, it should be 100 basis points lower than last year?
Well, I can't exactly say, but
directionally, it would be that way?
It is likely to be lower than last year, yes.
Got it. All right. Also, I wanted to ask you about the exports, because I think exports is margin accretive as well. So you said, I think it is around 20%, and the endeavor was to take it to around 25%. By when does that happen?
We have given ourselves 2 to 3 years time to make that happen. Actually, if you do the maths, 20 to 25% saliency increase means doubling export in 3 years. And we are gunning for that. And we are looking at LATAM, US. US, we've just launched the trucks radial, Europe, for 3 categories, which is agri radials, passenger radial, and truck bus radial. So we are on to doubling our turnover in about 3 years, which would lead to around 25% saliency.
Got it. There was some focus on EV tires as well, with platform wins, I think, in two-wheeler, passenger vehicles, and various other segments. Tell us, how much does it constitute of a total mix, and what's the the way ahead from there?
So right now, EV tires, for EV tires, we are looking at how we are doing in the OEMs, with the OEMs, the two-wheelers and the wheelers primarily. We are about 25 to 30% share in both two-wheeler and four-wheeler OEMs in EVs. The replacement market will pan out with a lag, and customer education is required, to buy the right tire for the right vehicle. So we are not really tracking that now, but we are happy with what we are achieving in the OEM segments.
All right, Mr. Banerjee, we'll leave it there. Thank you very much for your time, sir. Good luck to you and your team. Thank you.